Learning objective 4, describe common sources of consumer debt. First source of consumer debt is depository institutions. They lend money to their customers. So if you bank with do your banking with a bank, savings and loan, or a credit union, there's a good chance that they would be willing to lend you, assuming you have the income necessary to pay that off. Sales finance companies, these are lend money to buy consumer products. These sales finance companies lend money to through they're affiliated with the company that you're buying from. For example, if you go to Kohl's and you use your Kohl's charge, or any other store that has a charge card. These cards are the lines are becoming more blurred because these cards, a lot of times now, these cards may be a Visa or a Discover card or something, some other type of card. But a sales finance company is again lending directly to people that buy from financing for that company. Consumer finance companies also make small cash loans. These tend to lend to less credit-worthy borrowers. Be aware of borrowing from consumer finance companies. When you go somewhere and they tell you that they have a company that will lend to you at a zero interest rate, these companies make their living by hoping that you miss payments on your loan. Because if you miss your payment, you're responsible for every drop of interest that's available or charged on that account, and they're usually at very, very high rates. Now, other examples: stockbrokers lend money to their clients, and insurance companies lend money to their policyholders. These loans, they're effectively lending you your own money. So again, something to be aware of. The rates may be very low, but the reason they're very low is because they're lending you your own money. Choose your source wisely because the APR is very considerably. We'll see on the next page. Your life insurance company, they'll loan you money at 4%, but again, they're loaning your own money at 4%. Sales finance company, that could be 6%. Credit unions probably your next best alternative. Be wary of credit unions. The credit unions that charge the lowest rates are typically credit unions that you are truly affiliated with. They're part of some organization that you work for or belong to. There's a whole new group of credit unions out there that may or may not be acting in your own best interest. Other examples: commercial bank or savings and loan, 10%. Bank credit card, 18%. Consumer finance company, 24%. A good example of that is you go to Zales, and Zales has a company that's not part of Zales that will do your financing, but again, it's 24.99%. Figure 6.1 is the credit pyramid, and the top of the pyramid is the best places to borrow, and the bottom of the pyramid is the worst places to borrow. The top of the pyramid is prime mortgages, loans against insurance policies, interest-free programs, free reduced interest rate to loan or credit card offers. The bottom down here, rent-to-own programs, car title loans, refund anticipation loans, payday loans, and pawn shop loans. Truthfully, you want to avoid these types of loans at all costs. alternative lenders. We mentioned payday lenders, rent-to-own programs. Again, these people will lend to anyone. They're in the business of lending you money for things that you can't necessarily afford to pay for. The concept chapter 6.4, 3 types of depository institution that are sources of credit for consumers. We got commercial banks, savings banks, and credit unions. Distinguish between sales finance company and consumer finance company. Sales finance companies are affiliated with the sellers of big ticket items. Example, GMAC, Ford Motor Credit. They're part of the company. Consumer finance companies are not. They are not. They may have a relationship with the seller, but they're not part of the company. They charge higher interest rates, and they offer these 0 interest loans that are designed to get you in trouble, and you hopefully end up paying 18 or 21% interest. Summarize how stockbrokers and insurance companies serve as sources of consumer credit. They lend you your money and charge you for the privilege. Explain where you would go to obtain credit at the lowest cost. If it were up to me, I would go to and compare my sales finance company to my credit union or my bank, and see which one offers the best rate. The one thing to be leery of, especially when purchasing a vehicle, is the sales finance rate may be tied to a specific price for the vehicle. When you negotiate the price of that vehicle, you want to negotiate the price first before you discuss financing.